Pretty much go-to playbook, always on a Friday, always after the market's closed. No change there. Let's see if we are broadcasting yet. Here we go. Yep. And so oil moved, gapped up a little bit on the news. There's kind of some back and forth going on with what's happened now. If you haven't been watching, Trump calling on other nations to help secure the Strait of Hormuz and secure the oil transfers through that strait, because that's the biggest economic disruption right now. So it's entertaining to watch. But crude jumped up to 101, now sitting at 94. You can see the trend is clearly higher, albeit not as high as that spike we had a week ago at 120 bucks a barrel. But it is putting some pressure on the markets. However, if we look at the indexes, S&P actually gapping up about 6 points this morning. It's about a 1.25 point move higher. NASDAQ also set to open higher in about 30 minutes at about 1%. Treasury yield still elevated as demand for our debt decreases. But I want to go through how many people, out of curiosity, do we have joining us for the first live session this morning? Would you just type first there in the chat as your first live session? And y'all bear with me today. I've had this cough. I don't know how many of you have it. I've had this cough for 3 weeks. I kid you not. And I mean, I'm just insane coughing sessions. I cannot get it off. It is, I'm taking antibiotics. I got steroids. I got an inhaler they gave me. I can't, I cannot kick this thing. But okay, some of you here for the first time. Good, a lot of you. 5, 6, 7, 8, 10. Perfect. All right, well, welcome. I'm glad you're here. And my hope in the next hour is to simplify the stock market for you, regardless of what your experience is, okay? And I want to start at the beginning here, because this is something I don't think a lot of people see. And what this is the 4 stages of the stock cycle. Now, this is a weekly chart of Roku from a couple of years ago. We can look at hundreds of stocks and we'll see the exact same thing. But what you need to understand is every growth stock goes through this same 4-stage cycle, and it will repeat this cycle throughout its life. And if we go back and look at charts of Amazon and Apple and Google and Netflix, and they all have gone through this cycle over and over again. And to really understand why this happens, you need to grasp who it is that moves stocks. Because while you and I and our $5 and $10 and $100 and $500,000 trades have some impact, that impact is minimal. And the people who really move stocks are large Wall Street funds. And I'm not saying it's a rigged game. I'm not, some tinfoil hat guy, but it just stands to reason that in a industry of supply and demand, those creating the most demand, the most supply, meaning they're buying the most stock or selling the most stock, are going to be the ones that have the biggest impact on it. And so mutual funds, hedge funds, endowment funds, pension funds, right? The big multi-billion-dollar shops. So whatever they are buying in mass is going to go up, and whatever they're selling is going to go down. So the first thing you need to grasp in the market is our job is not to have master forecasting ability. All we're really using these charts for is to interpret what these big shops are doing, to get on the same side of the trade they're on, because if they're all buying something, it's going to go up and vice versa. And so these are the 4 stages a stock tends to go through. And again, it's a weekly chart, meaning each one of those candles represents a week. So you can see the scale across the bottom. But it starts in stage 1, which is the accumulation phase. This is generally when a stock is fairly cheap. They'll be accumulating those positions, building up positions, a line in that stock. And a lot of Wall Street operates on essentially spreadsheets, okay? They're trying to come up with a value of a company, and they've got, whether they're using a discount cash flow model or something else, they're kind of saying, all right, this company makes this much sales, this much profits right now. We think they're going to grow that by 10, 20, 30% each year for the next 5, 6 years. Then it's going to slow down to this. We think their assets are worth this. We think blah, 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 blah. And all those inputs are put into essentially a giant fancy spreadsheet that says, okay, based on all this information, we believe Roku stock in the next 3 years should be worth $500 a share. Well, if it's trading at 100, that's when they're accumulating, right? So that's stage one. Nothing exciting happened, kind of like paint drying. And this one is pretty short because this was COVID, this dip right here when the markets just fell apart. So it really would have been in a normal condition, kind of something like that. But nonetheless, stage one, nothing exciting happening, just kind of bouncing around. Now, eventually, the stock goes into stage two. It's the markup phase, and this is where the money is made. And there's many reasons for a stock to go into stage two. It could be their sales, their earnings are growing very rapidly. It could be the stock is in a hot sector, a hot area. The last few years, anything related to AI was pretty much in stage two. It could be if the stock was beaten down because they're in trouble, they got a new CEO or a new board and they're turning things around. Whatever it is, the stock is now in demand. These institutions, retail investors, everyone wants it. They're buying it up. And when these institutions buy stocks, they don't buy like you and me, okay? Because they're buying so many shares, it generally takes them weeks, if not months, to build up that position. Because if you and I want 1,000 shares of Roku, we log into E-Trade, click buy, and they're ours. If you want 50 million shares of Roku, there's not 50 million shares being offered. So you have to slowly kind of buy. And because of this, since there's this consistent buying demand, buying pressure, the stock trends higher. And what you'll notice in stage two is there's no big dips. There's no wild gyrations. I've got two moving averages. This red one here is a 50-day moving average. This white one is the 200-day. And for the most part, that stock just kind of rides that 50-day moving average all the way up. And again, if your job as a trader at this big fund is we need 50 million shares of Roku, well, anytime it drops 5%, you're going to buy more. Drops 10, you're going to buy even more. And so there's really no big dips because of that constant buying. And this is, like I said, this is where you're going to make most of your money. 95% of the gains you make in the stock market are going to come from stocks in stage two. And that includes your 401k account, right? With the stocks that are making money are in stage two. Now, eventually, the party comes to an end. Either that stock has reached what they believe is a fair value, or it's exceeded that and they want out. It could be those sales, those profits, those earnings are slowly dying. They thought they're going to grow at 20% a year. They reported earnings, they only grew 10% last year. That's why you see stocks that beat earnings or have a really good earnings report and they fall because it wasn't as good as they were priced in. The growth trajectory they had planned for is not as strong. It could be something's happened. The CEO stepped down. The CFO got caught with his secretary. The product's blown up in people's hands. Whatever reason, they're getting out. And when institutions get out, they don't do it as calmly as they get in. They just dump it. They want out. That's why they say stocks take the stairs up and the escalator down. And so what you'll see in stage three is typically the biggest drop since stage two started. And you'll notice, I'm going to zoom in here on it just a little bit. You'll notice that during stage two, see it rode this 50-day, never really got below it. And then in 2 weeks, the stock fell 30%. Not only did it go below the 50-day, it closed below it. Then it stayed for a couple of weeks. So this institution's getting out. Now, you notice it comes down, then it had a little push up there. Who can explain this little push up? Why do you think this stock in June went from, call it 300 to 400 or 450? Why do you think that happened? Well, primarily, that's retail investors buying the dip. That's what we've been taught, right? Buy the dip. And everyone watched this stock go from 100 to 200 to 3 to 4 to 5. It comes down. Everyone goes, finally, a buying opportunity. But it's not a buying opportunity. It's the beginning of the end. And sometimes they'll do this. Sometimes they'll come down and just roll over. I can show you others. But what you need to understand, this is where a lot of retail investors, amateur investors get in trouble. is that stage 3 is not a buying opportunity. It's the beginning of the end, because once the institutions are out, once that consistent buying pressure is gone, there's nothing to push the stock higher. If you and I buy, we might buy once, twice, maybe 3 times. We're not buying every day for 2 months straight. We don't have that kind of money. And you got some value investing funds that maybe step in here, a little bit of that. But for the most part, it's gone. And then you just enter stage 4, which is the markdown phase. There's no buying left. This is kind of just a game of uncle. And this is when all the diamond hands crowd gets whacked. And then you can see kind of where the stop loss, lots of stop losses kind of in here. And once it breaks them, just eviscerates. And typically a leading stock in stage 4 will fall 50 to 80%. That's what the data shows us. And if you go back and you look at charts of, I'll show you, right? Let's look at Netflix. And the trick with these is to put them in logarithmic scale. And look what you see there. This is 2022. Netflix fell 76%. Apple, although it's been a little bit, that was 40-something%, wasn't quite there. But it hasn't done it in a little while. Back here, though, it used to make the big dips. Amazon, 2022, 58% dip. That was 3 years ago, 4 years ago. Did 58% of us stop using Amazon in 22? Did 70% of us cancel our Netflix accounts? No. The stock simply went into stage 4. And then it will go back, and then suddenly it's cheap again. It's back in stage 1. They start accumulating because, again, the stock is now cheap based on what it earns, et cetera, and the process will repeat all over again. So these are the 4 stages of the stock cycle, and our job, one of our big jobs, is to interpret where the stock is landing. Because if you've got a stock in stage 4, I don't care how good a stock trader you are. I don't care how pretty the pattern is. I don't care how smart you are. You're probably going to lose money unless you just hold the thing until it comes all the way back. You're fighting against the current. Stage 2, however, where was a bad place to buy in stage 2? The only bad place to buy in stage 2 was really just unlucky, was right here. Anywhere else, you did fine. If your timing sucked, if you're, whatever. But there's no good place to buy in stage 4. And one last little, just to really illustrate why buying the dip doesn't work. Let's take person A, who bought up here at, $4.50 a share. Person B bought down here at $2.25 a share. Now, person B's feeling pretty smart. His dumb friend bought up here at the top. His dumb friend is down 89%, right? Now, person B paid half what this guy paid. Half. He shouldn't suffer huge losses. He got the stock at half off, right? What did he suffer? 78%. And I highly doubt you'd be calling your friend saying, you're down 89%. You're such a loser. I'm only down 78, right? So it just doesn't make sense trying to call the bottom, trying to catch a falling knife, right? So it's just, sure, you're going to know somebody who got lucky and bought in here and made a huge win. And that could happen to you too, sometimes. But more often than not, you're going to have a lot more losers than winners trying to catch in stage 4. So these are the 4 stages of the stock cycle. This is why I want to buy in stage 2. Now, I'm not saying that to make money, you need to buy right here and sell right here. It's not going to happen. But we do want to buy in stage 2. And my goal generally is to buy somewhere in here, get out somewhere in here. I just want to catch a nice fat piece of the move. Because in this 3-4 year window, if I can make a sweet 50% in 2 or 3 months, I'm out. I'm happy with that. And you'll probably have 2 or 3 chances to buy in stage 2. So when you've identified a stock that's in stage 2, how do you know where to buy? Well, That's what we're going to show. You can always short in stage two, stage four. Yes, absolutely. And thank you for the comments. Yeah, this crud, I don't know what it is, man. Some of y'all said you said your boy's been having it for 2 weeks. I swear I'm on like 4 weeks, Jerry. I don't know what the deal is. Mm. You didn't pay 99 cents for a year of trade signals, buddy. If I sold a year of trade signals for 99 cents, I'd be out of business by the end of the week. And no, I didn't celebrate too much. This was my birthday weekend. I've just had this call for a couple of weeks. So how do we know where to buy? Well, there's a couple of patterns. And in fact, one or two that are kind of our bread and butter go-to breakout patterns for knowing when to buy. And I'll try to show you a couple in here. I found a really good one. I want to show you something really clean. That's what we got. All right, this is a pretty good one right here. Okay. This will illustrate perfectly. So this is True Bridge. The company doesn't matter. The fact is we put this in a weekly chart. And clearly, this was stage 3. See it getting below the 50 and chopping around in here. Big stage 4. Back into stage 1 for about 6-9 months. And starts emerging into stage 2. Okay. So on a daily chart, as a stock is rising, and in this case, it's gone from, turn these movies, I'm going to make this as clean and simple as possible. In this case, it's gone from $8 to 13 in a couple of months. So a pretty good little run. It's a 70% run in 3 months, right? Well, if these institutions are trying to accumulate big positions, and their buying is pushing the stock up and up and up and up, they try to slow down the moves they can get more. And you've got two forces going on here. One is profit taking, and the second is institutional accumulation. Right? It's in stage 2. It's the markup phase. They're buying up the stock. Everyone has demand. But this thing's up 70% in a couple of months, excuse me. It's up 35% in the last 1 week. And when people get up big, they tend to sell. They want to take some profits. And that profit taking will typically push the stock down a little bit. Now, if the stock is still in demand, those institutions are still consistently buying like we talked about, they're going to take advantage of that and buy it back up. We'll then see a little more profit taking as it triple tops. They'll push it back up. And sometimes we'll even see some manipulation. They'll use something known as spoofing orders. When there's basically, they sell big chunks when there's light volume because they can run it down and chase stop losses and scare people out and then buy all that stock right back up. They'll have analysts downgrade the stock. They'll go on CNBC and talk about how the company's in trouble, which is total BS. They're just trying to get you out. But what you'll see during this is these pullbacks kind of get shallower and shallower. And it creates what I call this shallowing base pattern as the stock kind of tightens up. So it almost forms like a wedge pattern, right? And what's happening in this formation is the supply is being sucked out of the market. So we have to think of stocks in terms of supply and demand. Demand is people wanting to buy it, supply people offering to sell it. And not every share of stock is for sale, right? I mean, you own stocks. Do you have them all offered for sale? No. Most stocks are sitting in ETFs or mutual funds, or they're in your 401k. They're not currently being offered. So what's offered for sale, that's referred to as the float. And so they're trying to buy up as much of this float as they can. And so once they've scared out and shaked out and bored out as many people as they can, once there are no more $11, $12, $13 shares for sale, if they want more, they now have to pay up. Well, will anyone sell for $14 or $15 or $16 per share? And so that's what allows these stocks to make these big, fast moves. And if we look at the volume, it seems to be skewed because that one big, nasty sell day. Let me tighten this thing up. if we look at the trading volume down here on the bottom of the chart, and I'll let it go a little bit further for us. Albeit it went up a little bit over here, but this first, let's call it 2 months of this breakout, was that volume any higher than the 2 months prior? No, not really. It's not as if a bunch of people suddenly bought over here. The trading volume was about the same. The difference is the same amount of demand, the same amount of buying was facing, there was no shares, there's no supply. The same amount of demand had less supply. That's what allows these stocks to run. So we want to buy here when it breaks out through the supply zone. And the easiest analogy to kind of paint this picture is if you had a little mini economy with $10 chasing 10 widgets, those widgets would sell for about $1 a piece, right? I know it's basic, but you get the idea. Now, if over here somebody bought up 8 of those widgets, they bought up the bulk of the supply, and now that same $10 of buying is chasing 2 widgets. Well, now they're going to go for a lot more money. There's a lot of dollars chasing a fewer number, so they may go for $4 or $5 a piece. That's what causes stocks to move quickly. And so all we are doing is kind of exploiting the supply and demand dynamics. We are taking advantage of how the big institutions buy and the fact that they're trying to get millions and millions of shares. We're identifying these points. We have a real edge, a real advantage, and the stock is likely to make a big move very quickly. And we are buying right here as the stock breaks through that supply level. And that's when we have a good chance of making these powerful moves, big profits pretty quickly. Recently had a bad cough like you for months. Used lots of vitamin C, D3, K2, quercetin, and ivermectin. A couple days, really, Herman. Okay. Dude, I'll try anything. I lay in bed coughing for an hour straight. It's ridiculous. This last 30 minutes is probably the longest I've been without coughing in a while. But don't worry about me. Just making sense to everybody. Questions about this before we proceed? Is anybody having, in any way, an eye-opening moment? Is this making sense to you, especially the new guys? Because this is really crucial. This is kind of the backbone of what we're trying to do. Now, there's pullback buying. There's times when conditions are terrible, right? There's times when we're declaring war and oil shooting through the roof, and this is a heck of a lot harder than it normally is. But broad strokes, this is generally what we're trying to do. So you're just kind of taking it top to bottom, right? You want to have a good, strong bull market. I mean, obviously, when markets are rising, it's a heck of a lot easier to make money. You want to have a stock in stage 2 where you have consistent buying going behind you. And then you want to find these points where the stock isn't consolidated. It sucked the supply out. There's now very few shares and a lot of people trying to buy them. And you have a reasonable chance at a big push higher. Now, the other benefit of this approach, and we're going to go look at some stocks, is you don't need to risk a lot of money to do this, okay? Because what you'll notice about this pattern, as I mentioned, is it gets shallower and shallower as it goes from left to right. The pullback generally gets smaller. You may have a little dip here, it got a little below the last one, but for the most part, it's shallowing up. And so as this thing pulls back down in here, and they drive it back up, you can see the buying demand, and it fell to 11.5, boom, right to 13, okay? At that point, it should not go below this. They've exhausted all the sellers down there. It pulls back again. Again, they push it right back higher. At this point, it should not go below here. Again, should not go below here. So that red line is going to be our stop loss. That red line is showing us where we're wrong. And so if we buy it here on this breakout and our stop loss is here, well, we're only risking 5.5% on this trade. And if we're risking 5.5 and we're making 55.5, That's a pretty darn good risk reward. So if we can keep our risk small, I mean, it's kind of lines everything. We got a good market, got good stocks, we got a good breakout in a stage two. We're risking very little compared to our upside. If you do this consistently, you'll do very well because you're going to be wrong sometimes. You're going to take some hits here and there. But if you're risking 5, 8, 10% and you're making 30, 50, 100, do the math. Okay, so that's the broad strokes for the new people. I'm hoping that's somewhat eye-opening. And the next step, of course, is to figure out what stocks we want to buy. And the best approach to finding stocks to buy is to stick to the leading groups. Any bull market, every bull market for the last 100+ years has had a theme to it. There's always certain areas of the market driving the bulk of that run. And as far back as the 1800s has been the case. Back then it was the railroads, connecting America, driving it all up. In the 90s, it was dot-com stocks that were all the rage. And it was big tech in the 2010s. It was work from home in the 2020s. It was AI from 22 to 25. The last year or so, it's been physical assets. It's been gold, silver, industrial metals, really metals and energy has been the big theme of the market. And so what this is our industry strength indicator. And it takes 40 sector ETFs in the market and simply tracks their performance over the last 1, 2, 3, et cetera months and ranks them. And our goal is to find the areas that are consistently outperforming, the leading groups. Because we find the leading groups, then we can quickly find the leading stocks in stage two with the most momentum behind them. Now, the last 2 to 3 weeks has complicated things, okay? That's the tough thing about being a stock trader. There are things we cannot diversify away from. When we declare war on a foreign nation, it throws things off. When oil goes from 65 to 120 in a week and a half, it throws things off. It sucks. It's not fun. If you joined us last year, we were printing money. It was silly. It was so easy. We're in gold miners, we're in energy stocks, we're in silver miners, gold and silver physical. I mean, just printing money. So this is a very volatile period. And it's not because these certain areas like, oh, they're gone, we're getting out of them. But you get these liquidity events where when this stuff happens, and again, these shops are largely model driven, they just de-risk everything. And if you look at the first war after we invaded Iran, every stock group went down. Every ETF went down. Bonds went down. Gold went down. Silver went down. Crypto, like everything. There was nowhere to hide. And so the percentages just represent how much that sector is up over the last 1, 2, 3, 6, 9, and 12-month periods. And again, the last 30 days has kind of thrown this for a loop, but there's some themes that are consistently playing out. Energy, natural gas, solar energy, energy, natural gas, utilities, solar energy, solar energy. I mean, very, very clear. Energy is a big theme of this market. The metal space, rare earth metals, has fallen off the last couple of months here, but it was, every month. Gold miners, rare earths. We were seeing some aluminum and steel earlier. So the shift over the last 12 months or so has been toward physical assets. The AI trade, in my opinion, is way overcooked. Excuse me. NVIDIA, I believe NVIDIA is in stage 3. This sucker has gone nowhere for 8 months. And if we go and we look at the earnings, this is one of your clearest signs stock is done for a while. Earnings beat, went nowhere. Earnings beat, went nowhere. Earnings beat, went down 10%. They're reporting better than expected earnings, better than expected sales. They're raising their forecast for the following quarter, and the stock's not going anywhere. Why is that? Well, because it's all cooked in now. it's fully priced in. It would have to exceed these lofty expectations, and the stock is just not rising. I could be wrong. I've been wrong before. I'll be wrong again. But I think the NVIDIA trade is extremely late. I think NVIDIA will fall 50 to 80% in the next couple of months, by the end of the year, and it's just late. Meanwhile, look at the gold mining ETF has done during that period. Look what the rare earths ETF has done during that period. Go from 40 to 100. This is the ETF. It's every stock in there. Excuse me. Trying to cough off camera here. And you can see as I've drawn out here in the rare earth metals, you had a big clean breakout in this area. And so the question becomes, what can we get after now? Well, the hard way, or the deep dive way, is to go through every area of the market. And I've got this deep dive list here. And by the way, this industry strength indicator, it is included for all of our Black Ops members. So if you are joining us for the first time, if you're not a member somehow, there's a link in the chat, that $5 offer there. You can join our Black Ops membership, which is $5 for the entire year. We do these live sessions. I do one every Monday. My analyst, John Faday, does another one every Thursday. That's a members-only session over Zoom. You get access to this indicator. You can put on your trading view charts. You get my weekly newsletter, a ton of other stuff. It's just $5 for the whole year. Great way to learn. Best $5 you'll ever spend. So you can click that link or just go to tradewithross.com to get signed up. And yeah, that's that. If you're coughing more at night, you may have bronchitis. We'll need a Z-Pack like Zithro. I just finished 5 days of zithromycin, Nikki. So it must not be. Sounds like bronchitis. I don't know, man. I may have a weak immune system or something. Yeah, I literally just this morning, just 10 minutes ago, took my 5th pill for that antibiotic run. Okay, so where do we want to look? Well, right now, I mean, the big moves are clearly, as we can see, energy. I mean, shipping's up, right? Which makes sense. There's big disruption. They're charging more. Shipping is rallying with this stuff. Software making a bit of a dead cat bounce. So the software stocks are pretty much crushed. Nat gas looking pretty strong. And so what I'll generally do, I'll run through all these sectors, and I've got every industry on here. I mean, we can look at, this is space, aerospace and defense. This is agriculture, which actually looks pretty darn good. Do you see the breakout? Do you see how here in ags, albeit it's not perfect, okay? But that same idea of the big move up followed by its consolidation. And look at how toward the end here, it tightens up, it's nice and shallow, comes out, and then the ag sector breaks out. That's ideally where we're looking to start buying those stocks. Jet's not doing well. Banking, falling off a cliff. Biotech, kind of holding up. Consumer discretionary, nope. Energy, looks beautiful, right? How do you get the indicator to go to 1, 2, 3? So what I do for this, when you sign up, there's a little page. You'll just put your username in there. We'll give you access, and you'll look up TA Industry Strength Indicator, okay, and add it to the chart. If you notice up here in the top left, I've got 2 of them. So for one of them, I made 1, 2, and 3 months, best 7, and positioned it in the top right of my chart, okay? Then I added another one. I made it 6, 9, and 12, and positioned it bottom right. Okay. So you can do the best 5, best 7, best 9. You can do the worst performing stocks. You can put it anywhere you want. You can put 6 of these on there. But this is how I've done it to make it easy. Pineapple juice. Okay. B complex, boost immunity. All right. A lot of doctors in here. I appreciate it. I'm going to go take all this stuff. Take so many pills, my liver's going to shut down. I'm on doxycycline. Okay. Choke some brandy to clear that cough. Yeah, I tried a little bit of that last night. Didn't do much. All right, so let's see what we've got in the energy sector. I've got some lists I've made here. I've tried to, over the years, make stock lists of all the big groups. And all I do is just go to the ETFs and steal all their holdings. RCP, you can change the size, that indicator, when you're in here. Notice if you look down here, table size, large, you can make it tiny. It'll be really small. You can make it normal, small, etc. I make mine large, mainly because I'm broadcasting. I want you guys to be able to see it well. But let's see what we got in the energy space here. So Exxon, throw our moving averages back on. Yeah, Exxon very strong, kind of consolidating in here, looking like another run higher. CVX, where our new our new Secretary of Homeland Security happened to buy CVX back here. Sure, purely coincidence, I'm sure. Conoco, EOG. I mean, the problem is a lot of these are extended. And when I say extended, I just mean like, yeah, this looked good over here. Had I known we were about to declare war with Iran, I'd have loaded the boat on this stuff. But see how clean that was right over in here? That's what we're after. And so once it gets extended, we're just simply at more risk of a pullback. So I like to buy coming at a tight. So in other words, it's now it's kind of coming in. It is tight. I'd love to see something like this setting up that next move higher. Does that make sense? This is just what stocks do. They tend to kind of consolidate, run. They take the stair-stepping pattern. And what I'm trying to do is buy in here during this explosive part. I don't want to hold through this choppiness. I don't want to get caught in the pullbacks. I'm trying to just buy as it emerges. That's just a choppy mess right there. Phillips 66. Yeah, I mean, they're just all so extended in here. One Oak is tightening up pretty well. Oxy's just on a tear. Kinder Morgan looking really strong. Diamondback. Halliburton, more of a midstream services producer. They haven't got quite the rally some of the pure guys have. Baker Hughes, man, that's fallen off a cliff, hasn't it? Devon Energy. This one probably looks better than most. You can see we have a bit of a consolidation running through here. We got a couple of days tight. We could probably buy this on a move higher. Let's see, what's our highs in here? 46.41, 46.41. All right, let's do a buy stop at 46.50. It breaks through here. We can either put a stop loss down in here to ride the momentum or try it really tight. Let's see if it's just going to break. I'll give it a little bit of room, put it at 43.40 for stop loss, about a 6% risk. All right. So we got an order sitting on Devon Energy. If it'll break out to new highs, I'll buy that. Notice put a stop loss right here at the swing low. So what I'm betting is, move continues. We got our consolidation. It's tightening up, nice and shallow. Should run from there. All right, so we'll let that one work. Devon Energy, see if we get a move here. TRGP. Coterra, this actually looks really good. You see that same, and this is what I'm looking for. I'm looking to see that absorption, that shallowing in the stock. I want to get in after the profit taking is happened, after the shakeout move. I want to get in as it's emerging from there. Oil and gas. So yeah, nat gas done very well. NGLs. LNG, I mean, it's set to soar. Like some of the Middle East gets like 90% of their LNG through that Strait of Hormuz. John, FCG, the natural gas ETF. Let's take a look. Yeah, that's just a beautiful uptrend, right? And sometimes it's like, if you don't want to wait for the pattern, you can just, I'm going to hitch my wagon to it and see what happens. I'm just going to put a stop loss at 5 or 6%, see if this trend continues. And there's nothing wrong with that. Generally, I like to buy either breakouts and pullbacks. Okay. So breakout would be, see if I can find a good one here. Maybe something like this, where you have kind of consolidation coming in, you get the breakout. Second area to buy would be a pullback. And one of my favorite areas to buy a pullback is on a retest of the breakout area. So if it breaks out, retest, I'd love to buy here on the test. The other way is like just a clear level support or a key moving average. Usually if you get a big move, the first pullback to the 50-day moving average is a great place to buy. Let's see if I've got a natural gas list. Yeah, for natural gas stocks. There's some overlap, obviously, the natural gas names and energy list. Terra is really tempting here. Timing is the hardest part of this whole thing. Because it's pretty easy for us to look and say, yeah, energy stocks are going up. Just buy a bunch of energy stocks. The discipline is, do I have the discipline to wait until I've got a high probability area where I've had the pullback, it's consolidated, it's tightened, I can get in here and have a pretty good chance of a big move pretty quickly without a lot of risk. That's the hard part, is looking at the market saying, I know energy's higher. I know this is the play, but I can't find any really, really clean setups. And it's that what Minervini calls sit-out power, which is the discipline to sit and wait for good opportunities. And it makes these live sessions no fun when we don't have a lot of opportunity or a lot of good setups. And I don't want you to think I just yap and talk and don't buy anything. We make, hundreds of trades a year. But buying energy when crude goes from 65 to 120 to 75 to 105 to 95 it's just tricky, right? And this one's terrible. I won't touch that stock. Crescent is a bit of a high tight flag formation here. This could be, you kind of have this little same thing applies, right? Big surge in demand, limited selling. It's kind of tightening up in here. You call it a high tight flag, then you buy the breakout of the move higher. You could just sort of, do this on a move through 12 and a quarter. Probably a pretty good move there. Sand Ridge. Now this dashed one here, this is the 50-day moving average. So my moving averages are 20, 50, and 200. All simple, all based on a daily time frame. And generally, when you get a breakout, and look at how clean this one was, had some kind of peaky tops here, but same idea. Generally, you always want to buy that first pullback to the 50-day. That's one of the best places you can buy. You missed the initial move, buy the first dip to the 50. And so you had a little test here at 15 and at about $16 to buy that one. Some of these obviously have been delisted. Just monsters. interesting. It's a little guy. Yeah, 700 million. It's a small cap stock. Let's look at what our all right. Everything's about 1.25%. Equal weight indexes are up, which is good. You want to see it not just led by the big names. Put call ratios down a bit. Dollar surging, which is kind of hurting stocks. I know that sounds contradictory, but a weaker dollar generally makes stocks go higher. If dollars are weaker, it takes more of them. It also causes gold to go higher and silver. And so this little rally here in the dollar, which is kind of like the best house on a dumpy street at the moment because every fiat currency is failing in a big way. Dollar's just failing less than the others. And now China's agreed to trade energy in the dollar again. Or Russia has, excuse me. We've chased China off that their attempt at the BRICS, et cetera. So it got a little bit of short-term rally. It's working against us. Gold, near touching the 50-day, probably a good buy opportunity on gold. And you'll see this pattern better than in gold, better than anywhere, because it trades purely on supply and demand. I mean, we called this breakout back here in August in gold, and you see it here on the chart, just the clean shallowing. Came up again. Same idea. Big surge, absorb the supply, shallow, tighten, break out. And I thought we were getting set up for another one here until, the dollar got strength and we invaded Iran and everything else. But we're likely setting up for another move there in gold. But you can see this over and over throughout this full 2-year rally in gold. Run, consolidation, just textbook. I want to look at Bitcoin really quickly because Bitcoin is one of the few things trying to get some life to it. Now, this has been a nasty stage 4 downtrend. But it is trying to spark a rally off the lows. It's not the cleanest rally I've ever seen, but it's trying. It forms this rounded bottom pattern. Same thing we look for at the top because the principle is the same. You have to exhaust the supply. You have to find buyers, tighten up, absorb all that supply. Then it can be free to run higher. And it looks like it's trying to go. Likely going to come up here into this last supply zone at about $90,000. A couple of false moves here. False move in March, came back in, but it's really trying to push. Aren't we late coming to the energy stock party? So Ron thinking in as quickly as it started would be a great chance. Energy stocks come down quickly. Without a doubt, Timothy, we are absolutely late in the energy play. Yes. The tough, when it's, gold, it's a big macro issue, right? Everyone's losing faith in fiat currencies. They're de-dollarizing. Our debt is out of control. The spending, as we proved with the attempt at Doge, is never going to come down. Demand for U.S. sovereign debt is declining. Gold is a big macro picture, and it's led to a 2-year run. The semiconductor with the AI stuff, they're spending $600 billion a year in CapEx building data center. It's a big move. The energy thing is a geopolitical issue, a shock event. And so if Iran fires a couple of, it's some drones, some oil tankers, and, some stuff blows up in the Strait of Hormuz and no one wants to go through it for the next month, oil will surge. This move will continue another month or two. If they don't, you're right. It could totally come back down. So I don't really like trading this on news events. I prefer big macro themes carrying the wind, which is why the AI trade was good, why the nuclear trade was good, and the gold and the metals. Take copper, for example. There's a huge macro push on copper. It's the backbone of all these data centers. We use, 50 million tons per year. And we're not mining enough. There's a massive shortage. There's expected to be a shortage in copper for the next 5 to 8 years because of how long it takes to get a good copper mine up to speed. Copper ore grades are massively degraded. All the easy copper's out of the ground. When you use super high-tech stuff in South Africa, in the middle of Africa, to pull this stuff out. And so there's a true macro case for copper being 2, 3, 4 times higher the next 3 or 4 years. Why I own 50,000 pounds of the stuff. Um, so here, and I'm hoping this thing continues to tighten up here. And again, the last few weeks has thrown a wrench in this because we were getting, it was looking kind of good. We were tight, and then here comes war. It's but if this will come up and tighten and push, I'm going to get massively long in copper here on a breakout higher because I have the fundamental case, I have the technical case, the winds at our back, it's in stage 2, all those things, right? So oil, you're totally right though. I mean, it's getting into it, so I'm a little gun shy on it. Lunar, yes, I agree. There's a consolidation in Lunar. I actually took a little position on this breakout and talk about bad timing. I thought I'd get in here. I should have let it continue to work on Lunar. I really should just bought it. I saw it here. I wouldn't be down at all. But yes, total consolidation here in Lunars. We're coming in and we're shallowing. I got it a little bit early. But this is what I think we'll see. And then a push higher in Lunar. TLN gapping up the last few sessions. Let's see. What is TLN? Talent Energy. Oh, no, I don't want that. I think it's in a downtrend. Below its 200 day. Don't like that one. I don't know if I can add. I need to make an indicator. I can put the number on these moving averages. Just kind of floats above it. I don't want anybody to see them. Anyway. A little bottle of whiskey is good for a cough. Crypto, trust me, I've tried that multiple times. Okay. Thoughts on Grab? I mean, the chart looks abysmal. Making new lows. I don't know anything of air freight carriers. I can tell you the market doesn't like it. I can tell you the market hates it, in fact. If you know something, think it's a good long-term play, that's one thing. But from a technical point of view, it looks about as bad as it gets. Cavaletta Bio, yeah, looking strong. It's one of our insider picks. It's a volatile little sucker, but we saw heavy insider buying and got in and done pretty well on this one. Yeah, that was Thunder. What has happened to lithium stocks? It's been a downtrend. What's the lithium ETF? LIT. I wouldn't say they're in a downtrend. Lithium falls into that rare earth metals group, which is very strong right now. It's just, global disruption in every in some of the big supply chains. It's kind of making this choppy. It's what makes it tough. Now, is it too late to buy Micron? I don't think. You got a bit of a gap here in Micron. Let's see, what is the move up? 5%. What's the gap news on Micron? Why are we up? Analysts lifted price targets. 570,000 square feet of clean room space, boosting global capacity by 20%. New production online. Okay. I saw that Elon Musk is building his own semiconductors. Billy Bob Thornton, I'll take, Jim. A lot of people have been telling me I sound like Dave Ramsey, and that one I take as an insult because I hate Dave Ramsey. I just think he's so out of touch. Oh man, you need to get a $3,000 beater, live on $100 a week, and I'm like, bro, he's so out of touch. The guy's worth like $100 million. He doesn't know what a $3,000 does not get you a car that runs today. If it does, you're going to be in the shop with $2,000 repair bills every month. He's so out of touch. They're talking about how you make $60,000 a year and be in debt. Like $60,000, very easy. Very easy, Dave. I just hate I don't like his voice. I don't like the way he talks. I don't like his condescending tone. I hate that guy. All right, so Micron. Yeah, generally on these gaps, I'll look for what I call a gap and run. And so gaps are tough because the risk is bigger. So usually if a stock gaps, meaning it opens up much higher than it closed, some piece of news happened overnight or over the weekend. And what I like to see is how investors treat this gap. If it is, in fact, the start of something big, they'll typically gap. and they'll buy it. It might consolidate for 10, 15, 20 minutes and then start its run. If, on the other hand, investors take advantage of this gap by selling and selling into this liquidity, in other words, hey, I'll take the gap, I want to get out, it'll start to trend lower. And so you can do what's called an opening range breakout, where you take the first 5, 15, maybe 30 minutes, and you just build a range on it. And so we'll take this is the first 30 minutes here, okay? And say, all right, well, if it breaks above 455, I'll buy it. If I buy it there, my stop loss is right here at the low of the day, because if it's going to be a gap and run, it should not revisit. And you're just letting it kind of work out. Let everybody position that first 15, 30 minutes and see if it goes higher. I don't know if this is a big enough gap to do that, but that's generally how I play those gaps. Oh, I have no doubt. You're a mechanic, Matt? I guess Ferrari Matt should explain. You don't have a Ferrari, do you? Don't tell me you're like a vintage 308 Ferrari type guy. We'd be best friends. Run up to earnings. Oh, it's got earnings on Wednesday. That's right. Okay. The interesting number. I got a free card. It could be $3,500 for repairs. Exactly. MOS chart. This one's just all over the place. You know, you got a big run off the lows. I mean, something news driven. 25% up and then rips back lower. These, I just can't trade these kind of stocks. Oh, the Dinos, man. Yeah, if they weren't $3 million, that'd be awesome to have. The rates aren't that expensive right now. I know. I look at those, the 338s. Was it 338, 328? 328s and the 360 is like the most, only under 100K, somewhat modern one. Yeah, it's just too whippy, right? It's too volatile. Like a big stage 2, it began its run, should have got something, and then whipped back. It's just too volatile for me. And I can't trade my style when it's whipping 17, 20% in each direction. In a single month, it's up 20, down 20, up 20, down 20. It's going to tag me out. I'm not willing to take those kind of risks. Taiwan's almost out of energy. Whoops. Oh, wait. What's it not working? TSM. Not TSMC. Okay. Yeah, Taiwan Semi's probably a decent buy here. It's right here on the 50, although that news from Elon Musk could hurt it, because apparently Taiwan Semi is too slow to produce, so now he's going to make his own. And no one has ever done well betting against Elon Musk. Say what you want about the guy. He's overly optimistic. He never meets his deadlines, but I mean, the guy's created trillions in value. No Ferrari. Okay. Silicon photonics replacing copper. I don't think it will replace copper. My understanding, yes, you're right. For the data transfer, the silicon photonics inside those data centers, more efficient, moving more data. I don't think we have production anywhere near the level it would take to replace all the copper. And copper is used everywhere, not just data centers. I mean, it's all in our house. Anything you plug in, I mean, your blender has copper. Everything has copper. It's just we cannot get away from it. Alcoa is narrowing. Yes, it is. Alcoa actually looks pretty good. Yeah, I like Alcoa in here. So we've had 2 months for it to absorb this run from. I mean, this is a big run. That's a 100% move in 2 months from a $17 billion company. I mean, that's no small feat. And the industrial metals are all trending well: aluminum, steel, copper, all of it. Yeah, I think this looks really good in here. I like Alcoa. MOS climbed on Strait of Hormuz closing 35% of furlough. Okay, that makes sense. So they're direct. That Strait of Hormuz is directly affected. That makes sense for the volatility. Thank you. Okay. The Lola B3. Isn't that an F1 car? Cybersecurity tickers. Well, cybersecurity, the software space has been absolutely hammered the last couple of months. And this is all because of the AI developments. You got Claude Code and a lot of these. And I mean, even I can do it. I haven't messed with it yet, but I mean, I can download, um, what is that, OpenClaw, plug it into a $50 a month AI subscription, have 3 agents on my computer pulling files, doing stuff. And so it's a huge threat to these software companies, especially the enterprise guys, because spending 40, 50, $100,000 a year with cybersecurity defense firms, and so AI is just eating these guys for lunch. So the software sector is absolutely getting massacred. I wouldn't, all quick stage 4s, wouldn't touch them. Intel's joined a bunch of Japanese companies to open a new chip plant in South Korea. Interesting. Yeah, we did buy Intel back in here on one of those very similar wedge patterns I'm talking about. So see the big, see how it just, oh, see how it rallied and then just started to tighten in here. Kind of that high tight flag. In all this, you're going to see a lot of similar high tight flag. It's all that, right? Climbing in there, and that's when we got it coming out, and it exploded. But yeah, it's doing very well. And notice again, every dip to the 50-day is pretty much a good buy, so far. Coupang flying today. It's trying to come up 10% off the lows. Coupang is interesting. This is a big hedge fund buy. If you're not familiar, Coupang is like the Amazon of, was it South Korea, China? Headquartered in Seattle, but it's not Seattle. Korea, yeah. And they've got like a streaming service. They've got like basically an Uber Eats. They have like an Amazon, and a lot of hedge funds getting into this stock. So if I were going to pick up something off the lows, this is definitely the kind of thing I'd be looking at. What's the news on Coupang for the gap? Let's see. As investors withdraw petition against South Korea government. I don't know much about that. Oh yeah, this would be a perfect opening range breaker. So see how you do like an opening range. You could try this one. It's not too far ahead. Let's take some. I'll just take like 100 shares or something. We'll see what this thing does. Take to the market, 100 shares. And we'll just try this opening range breakout. Should have got a little bit earlier, but we can risk like 3%, right? So if it's a gap and run, should not come below this low, which is 1964. So I can just put a stop loss in here. Oops. At like 19, we'll give it like a dime below. And so this is how I trade opening range breakout gaps. Now I'm a little bit late to the party. I should have got 5, 10, 15, 20, 25. No, it's about right. Okay, so we'll get in here. And I don't need to go that far. I'll tighten it up a little. 1960. And so if this is in fact a gap and run, this is a move and this is the start of something big, it stands to reason it should not go below the low of the day. You gave it 15, 20, 30 minutes to see if investors are going to come in and sell that. And, if they're all down big, oh, it's up, screw it, I'll take it. But they're not. They're buying it, they're pushing it higher. So opening range breakouts on gaps, you're going to have a lower hit rate. You're not going to win 80% of these. You might only win 20 or 30% of them. But if this gap is the start of a stage 2 run in Coupang, and this thing goes to 26, 28, $30 a share, If I get up 50% and I risk 3, I only need, a couple of those to work. So typically what I'll do, I didn't take a very big position here. I probably should have taken 1,000 shares, but typically I'll do this. And if I get up 2 to 3 times my risk, in other words, I'm risking 3%. Okay. So if I get up 6, 8, 9%, like this is a runner could easily do that, I'll sell half of it. I'll bring my stop to break even and let the thing run. Worst case, I make a little bit of money. Best case, I got a position to a stock that's the start of a big run. And I'm all doing it with a low initial risk. And that's the whole crux of it, is to keep that risk as tight as possible. And the only way to do that on these opening range breakouts is to put it at the low of the day. DLR for a breakout. Let's take a look. Oh, yeah. 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 It looks really good because you've got a big, huge, you got 2 years of consolidation coming in here. Yeah, this could be good. I don't know much about it. It's a real estate investment trust. These don't typically make huge moves, although this one appears to do that. Yeah, I like this. I think it could be a start of something here. Yeah. American Bitcoin. Yeah, this is an insider buy. Some big insider buying in American Bitcoin. This is the company that the Trumps started. So, well, they partnered with some other people, but the Trump kids are in on this. So we saw heavy insider buying down here, like $1 a share. We are watching this one. We have a small position in it. Obviously, from a technical point of view, it doesn't look good. It's not an institutional buy breakout. It's an insider stock. And we will see what happens with this one. AMAT, yeah, looks good. Applied Materials, like the stock, like the space. Industrial machinery, nice little dip to the 50-day moving average. I think great place to buy this on a pullback. Stop at 315. Looks really good. Just ride that trend. All right, so we typed in a few stocks here. Lumentum, yeah, looks good. Coherent, beautiful trend, looks great. Applied Optoelectronics, a bit extended. I'd like to see it consolidate some here, but I mean, yeah, if you bought it a month ago, you're living high on the hog here. Tower Semiconductor, a little choppy for my taste. MTVL, not seem to exist. TNGX, oh, beautiful. Tango, yep. We've traded this on the Insider Effect multiple times. They've done pretty well. I mean, do we own this in Fire Trader? Let me see. We have a few services here where we follow these strategies for our members. We don't have it there. Okay, it's not a stock we own currently. But yeah, I mean, this is exactly what you want to see. Huge 36% up day, sticks, stalls, no pullback, breaking out higher. Perfect. And these biotech companies can make big moves. You can see, I mean, the bad boy's up 80% in the last 2 or 3 weeks. Likely just to start. It's up 900% over the last year. Massive momentum. 99 out of 100 relative strength rating. Yeah, this looks phenomenal. Love it. All right, let's look at a couple other before we end the session here. Applied Materials. We looked at ALOY, Realloys. Not familiar, but not with my money. I mean, it's down 50% in 2 weeks. Something nasty's going on with this company. Netlist. Don't know what this is. Going higher. Small cap. Foreign semiconductor. Looks like what's Japanese, Chinese. headquartered in California. For some reason, it trades must be looking at it on a different exchange. Yeah, I mean, looks great. I don't know much about it. Corning, yeah, Corning looks great as well. Obviously, a dip with the Iran situation, but really clean. Had a nice hefty breakout over in here. Fits in the theme of the market. And this is that gap and run. See how it gapped, and then just you know headed for the races. Uh, Oculus, OCUL, Ocular Therapeutic, excuse me. Not for me. No, too whippy in a downtrend wouldn't be my pick. Again, I'm just looking at the technicals on this. Murphy looks good. Yeah, right space. Uh, Dow, yeah, doing great. Nice trend. Start of a new stage two. So, if you go back and look at a weekly chart, right? And you can see big stage four downtrend. And then it eventually consolidated off the lows. See how these get a little shallower, and then it starts to tighten up nicely and come in here, breaks out through the 200, retest buy, my second favorite buy area, and then just beautiful. Yeah, hate that I missed this one, but it looks great. Wish I owned it. CTMX, I mean, thinly traded. Uh, Obviously, some kind of big earnings news today, up 53% in the day. It's extended. I mean, it's extended. Looks great. LNT, perfect. Yeah, this one looks beautiful. Would have a nice consolidation. Looks really good. NOW, definitely not. CTMX, we just looked at that one. Applied Dynamics, too whippy for me. Applied Digital, excuse me. You just can't get any traction one way or the other. Big 30, 40% swings in both directions. Market's just uncertain on this one. TNGX was overbought by short. You said to watch it start to run up. Yeah. Yeah, I mean, it looks great. Yeah, stand by that. Nanonuclear, nope. These were really hot. The nuclear stocks in 25, Nanonuclear, SMR, Oklo, GE Vernova, all of them huge runs. But they've come way back down, and they're no longer in favor. What's going on with Albemarle? Albemarle, yeah. I think a lot of this is just disruption based on what's going on in the Middle East because they're beautiful uptrends. Nothing about the story's changed. They're just kind of chopping around in here. You can see I'm down like 1% on this one. I still like it. I just didn't think it'd stick here below the 50 this long. So, I'm not risking a lot of money on this thing. I mean, what do we risk? 6%, 6.5%. So hopefully it pushes here. If it doesn't do something the next couple of days, at least by the end of the week, if it didn't stop me out, I'll just get out of this thing because it really should push. It should have bounced off this 50 instead of flopping around here. Archrock, yeah, looks great. No sign of slowing down. CTM, okay, we already did that one. Junior gold miner, double long. Yeah, I wouldn't be levered in juniors right now. I mean, gold's just, I still believe in a long-term uptrend, but it's currently kind of consolidating, pulling back, largely because of the strengthening of the dollar. You're going junior miners, and then you're going double long junior miners, which is a ton of leverage. I guess you could say this is the time to buy it when it's weak on the pullback, but that sucker cuts hard both ways, so just be careful with that one. Zebu doesn't exist. HPK, High Peak. Yeah, it's making the turn. Didn't not the cleanest pattern. The only thing that scares me on this is all the supply. I mean, you've got all this supply from November, December. And so I wouldn't be surprised to see it stall here as people trying to get out of break even. You're also still below the 200-day moving average, which means it's still in a technical downtrend. And a lot of the big systematic strategies will not buy anything under a 200. So you don't have that momentum behind you yet. I think it's early for me, but it could be the start of something. Terrawolf, yeah, it's, a little whippy. Um, but the trend is strong. Nothing's broken on this one. Oh, that was was that one of my squeeze stocks, TNGX? Yeah, good, man. How much are you up? You're up 50% or so, huh? It's at 18 now, huh? Good job, Brett. I don't think I even snagged that one. Yeah, those short squeezes can be powerful. They're hard to catch right. But man, when you do, yeah, you can do really well, as you can see. Why do I choose a 65-minute time frame instead of the 60? Well, the market is open from, I'm on Central Time, 8:30 to 3, which means 6.5 hours. So if I do a 60-minute chart, one of those candles is only going to be 30 minutes long. If I do a 65-minute chart, I have six 65-minute candles. So that's the only reason. Ross Stores, all right. There's a company I can get behind. Now we're talking. Yeah, it's a beautiful chart. Good Lord. Yeah, if you're wondering how the economy's doing, when Ross Stores are up 80%, probably the middle class probably not doing too well. Stop order executed. Oh, we're in Devon. All right, we got Devon. I don't trust this energy thing, so I'm going to tighten this thing up. I'm going to low here. What's the other stock we bought? We got Coupang. Oops, CPNG. About 1% on Coupang. We'll see how this one plays out. CK out CX. What does that mean? Nebius, some kind of news move here of 12%. We traded this one before, as you can see. These are the clean breakouts. You see how those worked. Yeah, it's a big gap. I don't know much about this one. Micron, we looked at Tesla. Yeah, Tesla's not looking so great. Yeah, I love Almonte. This is one we talked about and got into before, especially over in here when we had this little kind of 3-4 month consolidation breakout in Altamonte. I think it looks great. I mean, it doubled in 2 months. Right group, right stock, right pattern, good trend. Like this is everything lining up, and this is what you want to. This is what you want to focus on, right? Be picky, and it pays when you do it right. So you can just keep raising your stop up to the swing low. I'd have it at 17, and I'd probably have it at 17 and a half. Right now, I might choke it up to like 1875 right in here and just see if it keeps running. All right, guys, we are about 20 minutes over time, so I'll go ahead and end today's session for here. Didn't find a ton of stuff. We'll see what happens with some of these. We got into this morning, but if you haven't already, be sure to click that link to get signed up for the Black Ops service. It's just $5 for the whole year. We do these every week. Right now, I'm doing them on the Traders Agency YouTube channel. I was doing them on my YouTube channel until YouTube gave me a strike. I have no idea why. But if that happens here, we will have to bring these over to Zoom. So if that happens and you're not a member, obviously you won't get notified of them. So be sure you get signed up for that. You get the Thursday sessions, you get my weekly newsletter. You'll get access to this industry strength indicator and tons of bonus reports, other stuff. It's just $5. So I encourage you to get signed up for that if you haven't already. There's a link at the top of the chat, or just go to tradewithross.com. Thank you for the kind wishes. I'm going to take at least some of your recommendations on what to do to get this thing better, and hopefully I'll sound better next Monday. But don't get too anxious in this market. Don't let the FOMO get the better of you and try to dive into stuff that doesn't look good. I know energy's surging and the FOMO is going to take over, but try to stick to those tight patterns. Try to get in where you have a low risk opportunity, and I'm not trading a lot the last couple of weeks. I'll just be honest with you. I mean, there's times when the market's great, conditions are wonderful. I mean, a kid with a dartboard can make money, and there's times where it's real choppy, like it has been now. So there's nothing wrong with dialing back, trading smaller, not trading at all for a couple of weeks until this thing smooths out and the trends become clearer. But just stay disciplined, and I promise, if you follow this approach, if you stick to the leading groups, the leading stocks in stage two, stick to these clean breakout and pullback buys, I can just about guarantee you will see extensively better results than what most people are getting. All right. So thank you all again for joining. I'll see you next Monday at the same time. And you guys have a great week.